Today we're going to talk about two options that you have if you owe the IRS and you cannot afford to full pay right away. Stay tuned for option number 2 because in my opinion it is the most important option that you have. First option that you have is to set up an installment agreement with the IRS. This allows you to make smaller payments over time to get your tax debt paid off. Each payment plan that I'm going to explain has different requirements that must be met in order to be able to be eligible for that payment plan. The first installment agreement is an automatic installment agreement. This is when the taxpayer owes less than $10,000. They agree to pay the tax debt back in 3 years. They also cannot have had any tax debt or installment agreements in the last 5 years. Financial information is not required to be sent into the IRS to be approved for this payment plan. A streamlined installment agreement is when the taxpayer owes between $10,000 and $50,000. Again, the requirements are no tax debt or installment agreement in the last 5 years. The taxpayer agrees to pay back the tax debt in 72 months, and financial information is not required to be sent into the IRS. The next installment agreement is the non-streamlined installment agreement. This is when a taxpayer owes between $50,000 and $250,000. They have up to 120 months to pay off the tax debt. Again, no tax debt or installment agreements in the last 5 years, and financial information is not required to be sent into the IRS. A regular installment agreement is when a taxpayer owes $50,000 or more in tax debt, cannot full pay, cannot pay back within the 120 months. So in this case, they have to provide financials to the IRS, and based on the information on those financials, the IRS will determine the monthly payment amount that needs to be made until the debt is full paid. There's also a partial pay installment agreement. This is when a taxpayer does not have the ability to make payments to get the tax debt paid within the statute or the amount of time left. In this case, they do need to provide financials. They will set up a payment plan that will be less than usual, and then the IRS will revisit this payment plan, usually within 2 years, to see if the taxpayer can pay more each month than what has originally been decided. Thanks for sticking around for option number 2. As I said, I feel like this is the most important option that you have, and that is to file your tax return even if you can't pay anything. The reason being, this will eliminate the failure to file penalty, which can add up. Now, if you found this information valuable, save it for later, share it with a friend, and make sure you subscribe for more tips like this. And you have a great day.